Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And we have Jeremy from Circle on CNBC being questioned on USDC. And guys, again, USDC has been around long enough where they already knew it wasn't back 100%. The same way Tether. We know Paxos is the closest thing to being backed at 100%. But remember, when it comes to the media, it doesn't matter whether it's good news or bad news. The New World Order uses that, especially when we hear about the lobbying. We have Coinbase, we have Ripple, we have Stellar. But guys, we know they don't need to lobby because we know the New World Order is trying to bring in this fourth industrial revolution, and they need cryptos for this virtual world. Because we know when it comes to the New World Order, it's all planned out. Y'all have a wonderful day.
A mistake on Coinbase's side in terms of how they described it because they didn't know, meaning they'd gotten the wrong information from you, or whether you think that you misdescribed it, they misdescribed it. What happened here?
Yeah, sure. Thanks. First I'll just say, I can't comment specifically on Coinbase.com's web marketing practices, et cetera. So I would certainly leave that there. What I can tell you is Circle and Coinbase have a very close partnership around USDC. We forged this protocol together several years ago and worked very closely together on the technical standards, the governance standards, compliance standards, the overall approach with this. And that has been evolving considerably as it grew dramatically last year, growing 10x, and then accelerating into this year. And so Circle, just to understand, Circle is the sole issuer of USDC. We are the regulated financial institution that issues USDC. And we in fact, are the firm that is managing the assets that back USDC. We are getting attestations from major accounting firms on those, and then publishing and disclosing those. And all of that process is sort of also gone through Center, which is the partnership vehicle that we have with Coinbase.
Jeremy, but I think the question that sort of underlies all this is whether the end user understands that there are risks still involved in this, and it's not just a stable dollar. I mean, it's not a stable coin. It may be stable 99.9% of the time, but there's a potential that it isn't.
Yeah, I mean, this is the essence of payment systems and payment money and electronic money in the world today. When you interact with a Square or an Apple or a PayPal, I'll just use those first as an example. You're not usually asking like, well, if I have a bunch of balances there, what's going to happen to those? But if you actually read the customer agreement, then you'll see, okay, they can invest them and do whatever they want with them. You don't get any income. It sort of defines that in a high level way. But generally, because we have a regulated system that is specifically designed with consumer protection mandates, and companies are bound to those, examined by those, et cetera, generally people say, okay, if this is a regulated financial product, that's probably okay. Stablecoins are a little bit different because I think the crypto market just in general demands more transparency. And so I think that's relevant. We've tried to follow and lead in that. But it's also very similar to the existing commercial banking system. If you're making a dollar deposit at a bank, you think of it as a dollar there. But what you're really doing is you're giving a dollar, and that dollar is being lent out many times. It's being rehypothecated. It's in a basket of assets that include many, many other things. You have a right and an entitlement to redeem that. I think what we're seeing is stablecoins are becoming so big that they're going to be part of that regulated federal banking system. And that's necessary as these become larger scale in society.
The issue, Jeremy, though, is that there was never a promise from these other payment systems that their one unit, which in this case is US dollar coin, is the equivalent and fully redeemable at any point in time under any circumstance practically for $1 US. And the question is, when did this shift happen? And was this accurately and immediately conveyed to consumers, seeing that Coinbase, which is obviously a major on-ramp for crypto for most retail investors, had said until very recently that one USDC was equal to $1 US. Now, I understand you can't comment on Coinbase's policies, but Coinbase knew about the interest received from the reserves, because contractually you do give part of the interest to Coinbase. That's an agreement. So it's not like they didn't know.
We have a great partnership there. And like I said,
Jeremy, was there a change in what actually backed each USDC? The Center Consortium on the website, as late as March of, let me just check my notes, as late as March said that Coin's reserves were held at FDIC institutions, March of 2020. In April, there appears to be a change where it said that USDCs were held in approved investments. And this, of course, happens before your planned market listing, which is still upcoming. And part of your materials say that the interest that you receive from these reserves is a fundamental part of your business, $3.2 million in income from these reserves in the first quarter. So was this all in an effort to make your balance sheet look even better ahead of your market listing?
Well, what I would say is, we're trying to build a significant scale business here. And what's interesting about stable coins and about blockchains as payment systems is inherently what they do is they drive the cost of payments towards zero. That's really powerful. That's very disruptive. That's really meaningful for businesses, for market participants, et cetera. And so, if you take a traditional fintech payment system as an example, take like a PayPal, their business model is to charge, 3-4% fees on all the money that flows around on that system. In a blockchain-based system, the operator of that, in this case, say Circle, we're not participating in any transaction fees. That's just the fees of the blockchain. So if you go through our investor materials, yes, it's very, very clear. Operating the USDC market infrastructure, which has supported nearly $1 trillion in payment transactions, has grown quite considerably in the last year. We see becoming a backbone for many, many other types of applications. That is growing. So we do generate a modest amount of income from that, all very tightly bound by those permissible investment rules of our regulations, bound by the liquidity covenants that we hold ourselves to, et cetera. But it is a modest amount of income. If you look at the broader picture of revenue for the company, it's many, many other facets which are also larger. Now, but that is accurate. As we've grown from something that was 400 million in circulation as early 2020 to 28 billion in circulation, that affects the change in ultimately how you manage the assets and liquidity behind that payment system.
Thanks. Meantime, the crypto industry taking a big step this week on Capitol Hill, establishing itself as a force to be reckoned with, despite the crypto amendment getting blocked from a bipartisan infrastructure bill. Elon Moy joins us with the latest this morning. Good morning.
Well, good morning, Andrew. You're right. The crypto industry was ready when this big fight erupted over the infrastructure bill. In fact, they were the ones who started it. Spending on lobbying hit $2.4 million during the first half of this year, according to the Center for Responsive Politics. That's almost the same amount that the industry spent in all of 2020. So if this keeps up, the lobbying dollars are on track to nearly double. Now, the biggest spender was Ripple Labs, deploying $550,000, the most it's ever spent in 1 year. Second was Stellar Development Fund at $330,000. Coinbase spent $160,000. Now, the industry is also on a D.C. hiring spree. Tamika Tilleman was a senior advisor to Hillary Clinton, John Kerry, and President Biden. This week, he joined Andreessen Horowitz Crypto as its global head of public policy. And
we're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.